Okay, so why should I pay myself a W-2 income through my S corporation? The short answer is that the IRS requires you to pay yourself what is called a reasonable salary. Now, it's very up in the air and it's a very gray area as to what's reasonable. But if you're bringing home anything over $40,000, it's recommended, or I recommend, that you pay yourself a W-2 wage. And the reason I say that is because you've heard of an S corporation. You have to be elected to be, or you have to elect to become an S corporation. So it has to be approved by the IRS. So whoever set up your S corporation, or when you set up an S corporation, you actually have to request that you be elected to be an S corp, and they have to approve it to become such. Because the reason is because it's a higher status, and you also get tax benefits from it. And I'll explain that to you. So in an S corporation, you have two ways to pay yourself. You have distributions, and then you also have W-2 income. Let's say, for example, it was a partnership, and whatever let's say the partnership made $100,000 in 1 year net income. Okay. And you were responsible for 50% of that. So you would actually pay self-employment tax 15.3% on the entire $50,000 of net income that you're responsible for, or your percentage owned. Okay. In an S corporation, it doesn't work that way. Let's say if you took 100% distributions, if you took 100% of your $50,000 in distributions, then you actually wouldn't pay 15.3% at all on all that income. So that's not the way you're supposed to do it. But I'm just saying, if you did that, that's what would happen, is you're essentially skirting 15.3%. So the way the IRS kind of manages that is they say, okay, we'll let you take distributions, but you also need to take a W-2 wage. Because when you take a W-2 wage, you're actually paying the self-employment tax of 15.3% in the W-2 wages. So the name of the game is you need to pay yourself a reasonable salary and then pull as much distributions as you can. But what it all comes down to is reasonable salary. They want you to pay yourself a reasonable salary. So what does that mean? Okay, the thing that I always ask somebody else is, I say, how much would you pay someone to replace yourself? So if that's $40,000, $80,000, $200,000, how much would that be? Okay, to replace everything that you do within your business. And that's kind of what it comes down to. That you can do a huge analysis, and there are different companies that'll actually determine what your reasonable salary is. But at the end of the day, you kind of know what that number is. You kind of know what that would be if you were to pay somebody else to do to do your job. And then you get the benefit on top of that to be able to take distributions. So I'm just going to throw out an example here. So let's say that in a given year, you make $100,000, okay? You personally. Well, in order to do your job and to do it right, you'd have to pay somebody around $60,000, okay? So that's what you do, is you set up those wages for $60,000, and then you pull $40,000 in distributions. Everything that you pull in distributions will be tax-free up until your tax bracket rate. So you won't have to pay self-employment tax on $40,000. You still have to pay self-employment tax on the $60,000, but it's kind of a way to kind of balance that out and give you kind of a tax break. So that's why a lot of people go into S corporations, because once you meet a certain threshold, typically over $40,000, that's when you want to start convert to an S corp, and then start paying yourself a salary and pulling distributions, so you don't have to pay 15.3% on all of your income. I hope that makes sense. Again, it's the same thing if you were just a sole proprietor, right? Let's say you're a painter and you brought home $150,000. Well, if you're just a sole proprietor and you're not an S corporation, and you made a net income of $150,000, you're going to have to pay 15.3% on $150,000. But let's say that same painter went and converted to an S corporation and was approved by the IRS, then he can pay himself $100,000 in W-2 wages and then take $50,000 of distributions. So it's kind of this balance, this check and balance that you have to do when you become an S corporation. It is a corporation, so you have a lot more hoops to jump through, but you also have the tax benefit of being a flow through entity, and it flows through to you personally. I hope that makes sense. Let me know if you have any questions on it.